into episode 10. Right, first and foremost, I've left you guessing a little bit with the moving averages, but I'm now going to share them as we move into episode 10 and beyond. So guys, blue, our good old 8 EMA, and then this one here is the 21 EMA, okay? And that's for the higher time frames and the lower time frames. So with that being said, we can go a little bit deeper now and I can relate more information to you. Firstly, before I dive into GBP AUD and what's been happening in the last 2 or 3 days, let's just go back over to gold. So with gold, I'll just simply remove the box. I wanted to see how price played out. And what we actually seen and what the market is delivering to us right now is, number one, in the last video I did mention that we could be in for an uproar to the upside to go into maybe 1472, and I delivered the notion and the thesis as to why I thought price action could actually go there. Coming into the 15-minute time frame, as you can see now, what I was looking for is potentially the price to dip back above this high over here, back above, maybe retest it as support and then continue to the upside. Okay, so what we can actually see is since the last video, episode 9, where we ended, is price bumped back into that area. Red candle, bringing PA back down. Secondary, red candle, we can see where price spiked back into. Number one, we have 1465 there, but we also went back into that region, rejected it. Came a little bit lower, and then boom, we had another push into the region. And currently we have 5 minutes left on this candlestick on the 15-minute time frame. And it looks as if, okay, look at this now. It looks as if the market has gone for another push into the region, another push into 1465, and now we are looking for a continuation. So this is more or less like a micro double top at our pre-plotted previous high, which is now using as resistance. Also, what I want to point out is on the overlap today on the US session, we've seen price push back above, and then there was weakness straight away. Price came back below, sat on the London high, broke back through the London high, and then, as you can see, we are now swinging to the downside. So my theory, I did map out both sides of the fence, and over here on the hourly as well, you can see that the hourly has closed. This red body of the last hourly closure, we took out 1, 2, 3 previous wicks. What's also important here is that we note the back-end retest, more or less to the T, on the 4-hour area of resistance. So we have the 4-hour area of resistance, and we also have our intraday area here, in which the price has reacted to once, twice, right there. So I'm looking at gold now continuing its downside move into this area, 1461, and maybe even beyond. As you can see here, we have this floor, and then we have 1458 and so on, but we're going to take the market every step as it comes. So that's that on gold. Coming back over to GA, we have a little bit of catching up to do. Let's go into firstly the day. Okay, so the last video we set out and I went in with a short position around here, and I weighed up the risk reward. Remember, we had the third drive high where the bearish engulfing bringing us back below that area, that band. You can go and view episode 8 where I talk about my thesis and why I actually lined that short trade up. We're in profit for a while. Okay, what was important was we actually didn't breach this band right here where we retested once and twice. Price in the US session that day, as you can see, pushed to the upside to test, and then as soon as the Asian switchover came, Asia pushed the price all the way through and made that new high. So that was more or less followed structure on from the day, because the daily closure was here very strong. We had the 3 pin, 1, 2, and 3. Came straight off the moving average there as well. And we actually took out a previous high, which was the spike wick high right there. And market ever since has just continued to push higher. So what I then did, okay, we breached the high, we retested it into the MAs. Then we had the high right here, which I simply used the end of the wick. I brought the trend line across, and you can see there as we came back above that, we retested it more or less to the pip. Market continued to go higher throughout a few sessions, made its preliminary high, and bearish engulfing formation. I didn't mark on. We can do now if we want to just put that little US high over there. Have the US low as well if you want to go and place the US low on. So we came into the US session, we made multiple lows. I'm going to take this one. So what we did, we consolidated in the US session. Asia, we broke down, we retested that area, and then going forward, Asia's low, broke Asia's low, came back to test that area, which I brought from the wick after making that high off the high volume candle, and then we more or less went back and forth for a while. The market, if I look at the 4 hourly on GA, at that point in time, this was the pullback. So what actually happened here as well, to note that in the midst of making the high right here, the bearish engulfing pulls price back to the downside, so it's made its US high. At the same time, we've had 1, 2, 3 wicks that if I line my crosshair up, you can see 1.9250. Okay, we respected that level good few times, even this area here, this area, and then we pulled back. When we did pull back, we didn't actually break or even retest this initial area, 9146. Price pulled back up. We had the closure over the weekend, and then we gapped. Okay, we gapped a little bit higher, tested the previous Asia low, and then we actually broke out of that coming into Monday, Asian session on the Monday. Then I started to get busy with the markings once more. So currently 1.9350 is a huge area of resistance for GA. I'll get to what I expect of the pair in a moment. If I open up the micro chart on the intraday, this is what we've had this week. So we've had Asia high form. We come into London. We had 1, 2, 3, 4, 5 candles respecting that high. Then the price boosts through it to make the London high. And off the back end of the London high, the bearish engulfing comes in with a shooting star. We come back below. We retest that area to the absolute T in London. We retest the Asia high. And then we dip back to the downside. Now, the downside dip, I created the US low from that, as you can clearly see, taken from the body into the candle right there. And I started to put labels on there as well. It's a really good idea just to get your mind working. And when you go back into the chart, you can just clearly see which session made the high and low. So if the US low, and what I'm also going to do is copy and paste this. This is the US high. US high right there. So I put both bands on. The US low, it made a low in the US, and then we came back to retest that once more, as you can see on the top end of the rectangle right there. 1, 2, 3, 4 times. We consolidate, test it again in Asia. Asia comes up to the US high, breaches it, but not for long. Breaches it a secondary time, but puts in the wicks. 1, 2, comes back down. We have this forceful push. Forceful push in Asia just before the London overlap, where we come right back into that US low. So the cycle this week is well underway, and if I just tile the charts, come into the hourly. Let's have a look at the hourly time frame. So on the hourly, what I've gone ahead and done is, when we had this forceful push to the downside, we also had the hourly wicks. So I've taken this wick and brought that across. So this is the result of this push here in Asia before London. So that's the Asian push. The London, we tap into the US, as you can see, the spike is right there. We tap into the US low again. We also tap into the hourly support. We get the bullish engulfing pushing us higher, and that's the result of London pushing the price into new areas, new highs. One here, pull back, secondary high just there. Now if I just zoom out on the chart for a second, we can see that we've had 1 push, 2 push, 3 pushes. So again, it's only Tuesday, start of the week. What I'm looking at is this pattern: bearish engulfing, price rolls over. Bearish engulfing, after a high, price rolls over. So what can we see now, and what the market is communicating to us, is that the bearish engulfing has been placed in early today. So we had the London high right here, and I've just stretched this across, ready for a potential retest. But On the US overlap, price has been pushed into the highs, and then I've gone ahead and this was the first significant high at one point until London pushed through and made the ultimate high. So I've taken the trendline tool and I've put it onto the edge of the wick there on the 15-minute, and I've also done the same with the lower boundary. So at the minute, you can clearly see price is consolidating on the intraday level, on the intraday perspective. And what we've seen just maybe an hour or so ago is that price 1, 2, 3, 3 mini drives there, and it was driven into the previous low. So I've more or less boxed this area off, and what I'm waiting for is one of the areas to actually break through. Now, because of the higher time frame analysis on the hourly here, and the pattern that we've seen GBP AUD do for the last few days or so, at the minute you can clearly see it's consolidating, and the result of this price behavior here is 1, 2, 3, 4, 5 wicks. And we've also spiked through and found support at the 8 moving average, which is important. So this can in fact go either way at the moment. It can definitely go higher if it wants to, but on the 4-hourly you can see where the last 4-hour closure of the candle was relatively weak. It's around 45% of the overall up move, and right now we are consolidating at 1.9350, which is a psychological level for the pair. Opening this chart up here on the micro perspective, because of what I've seen on the hourly and so forth, and how price has suddenly just halted on the 4-hour, is that price can do one of 3 things. It can maybe retest this area and then fall. It can push back into London high, so US respects London and then declines, or we can decline from the more or less top third region of this range from A to B, and then we can see price start to roll over, perhaps break that area, retest the lower boundary, and then collapse and decline. You can see where the previous London high, Monday's London high, as London pushed the price back up to them levels, London actually broke the highs, retested it on 2 candles, and then went into a higher realm. Now, the thing here for me is that once we actually touched into the base low, we had the bullish engulfing bringing it back to the upside, and we're now back above the moving averages. So I'm watching this one at the moment. It's currently 10 to 6 p.m. GMT in London, and all I'm looking for, I'm favoring the rollover. So I'm looking at a decent, well, anywhere around here, here, and here. Here are the 3 areas in which market can roll over. But to give us pure confirmation that GBP AUD is now starting to reverse, we have to break this level, 1.9323. So this is what I'm looking for. Break, retest, continuation, and maybe these areas, they will be respected again if price does decide to roll over. But this one here, the US low, which was tested 1, 2, 3, 4 times, would be more or less target number 1 for me, just because of the amount of times it was respected. This one here, this is going into last week. I can go ahead and remove that, and these I just put them on just for the video and education purposes. But this is the clean and new cycle which GBP AUD is now playing to. So we have to be very, very specific, and sometimes we have to wait here and be patient. But yeah, that is more or less the scope of GA. So I am hoping that we do get a rollover to the downside. And also we have to take into consideration the 4-hour areas. So we have this one right here, which is 9273, which lines up more or less with the US high of the week. So if it does start to reverse, we have to think about where retail stops are. Now, number 1, upon the market open and being pushed higher into the Asian session and London session of Monday, we respected the 8 moving average 1, 2, 3, 4, 5 times. As you can see, the wicks respected that area very, very well. Now, below that, this will be a nice area for retail stops to be for those who want to carry longs. So this area, as you can see, look at the crosshair on the micro scale, it comes in at 9233. So there's that US low. So that's why I would anticipate the rollover to reach and breach this area to take out the stops there as well. So from current price, it is around 110 pips. So let's see how this one plays out, and I'll catch back up on this on the next video and go from there. So let's just look at gold once more. Gold has now closed on that 15-minute candle, and it's looking as if gold can potentially come back into 14.59 and maybe even a lot lower. What's also important here as well is that we've closed below both moving averages, especially the blue, the ATMA. And yeah, that's all systems go. In the case of this being a trade setup, the stop will go 3 to 5 pips above the last candle high, 1466, I would say. And I'll keep target open on this one, but have a target in mind of 1459. So I still have 30 or 40 pips on an intraday perspective.